Okay, time now for top picks from Gordon Reid, our guest on Market Call today. Number one today, Alphabet, of course, the company behind Google. Ticker symbol GOOGL.
Right, and they're in terrific shape as they gear up for the fight of their life in AI and protecting search. They've got something like 92% of the search market. Without question, they're going to lose some of that. But earlier I talked about Uber and the bigger pie concept. I think that very much applies here, that they will stake out their place within AI, and search will become part of AI, and it'll be a much bigger pie. They've also got great initiatives going on that don't get a lot of attention. 2 billion people around the world watch YouTube.
Yeah.
2 billion. And they've got Waymo, which is one of the leading driverless car technologies out there, and it's coming. We know that. So when you spend $33 billion a year on research development, good things are going to happen. And Google, Alphabet, has a history of that. They're trading very inexpensively, Paul. They're trading at less than a market multiple, yet they're growing at a much faster pace. So we are very high on Alphabet and own it in our U.S. large cap.
Okay, number two is another tech giant, Meta Platforms, the Facebook company, ticker symbol META on the NASDAQ.
They took a hard left into the metaverse at one point a few years ago and left many people wondering what was going on, including us. And they've reappeared, and they have reappeared on, again, the back of AI, where search is Alphabet's vehicle. Obviously, social contact is Meta's vehicle. 1 out of 2 human beings in the world uses Facebook or Alphabet or Meta or a product of Meta every day. So it's a fabulous company, obviously an advertising mecca. I mentioned that 33 billion was the number that Alphabet had for their research budget. At half the size in terms of market cap, Meta spends $40 billion a year. So just huge astronomical numbers, and they're yielding results. So AI for Meta comes in the form of Llama, which is an open source technology in AI, and they will stake their space. And again, this is a different time than we saw a quarter of a century ago when we saw the internet bubble being built, where companies were trading at 80 and 90 and 100 times. Cisco Systems was trading at 90 times earnings in the late 1990s. These companies are trading very close to a market multiple, 20, 22, 25 times earnings. Yet the growth rates are phenomenal, and the predictability of those growth rates is high because of the investment that they're making in new initiatives. So again, very, very high on Meta.
Okay, and number 3 on this day, Visa, the payment processing giant, V in New York.
Yeah, and if we could continue the theme of search and social, and this is commerce. And Visa is the largest fintech company in the world, and trading now at about 25, 26 times earnings. I've seen many periods, some lasting years, where they've traded in the low 30s in terms of multiples. So a consistent earner. We're all tied to our cards, and it's all about transactions, and they just consistently grow those transactions on a very regular basis and produce profits. So again, we like Visa.
Okay. Gordon, thank you as always for being here.
Thanks, Paul.
Gordon Reid was our guest on Market Call. We're almost out of time, but before we go, let's check in on the markets. It's been a while since we've done so. There's a live look at the U.S. markets. You can see the negative pattern has persisted more or less through the day. The Dow is break even, and the S&P 500 is down by 17/100ths of a percentage point. The decline is smaller on the Nasdaq. So generally speaking, the negative tone of earlier in the day has eased somewhat. These are more flat-looking markets than they were at the beginning of the show. Let's go to the TSX Composite and see where Canada's national benchmark is trading, and it is down by 1/4 percentage point. I'm going to get you a snapshot of the stocks that are exerting the most influence on the TSX. In terms of negative influence, Brookfield Corporation is down by 1.5%. It's taking 12 points off the index, 12 of the 58-point shortfall that you see on your screen. There's Brookfield. Followed by Shopify, Royal Bank of Canada, Cameco. The uranium stocks are giving back some ground after some big gains recently, and Bank of Nova Scotia. Those are the top 5 most influential decliners. In terms of influential gainers, it's all about the gold and silver stocks. Here are the top 5 most influential advancers: Barrick Gold, Agnico Eagle Mines, Wheaton Precious Metals, Franco-Nevada, and Pan American Silver. Every one of those 5 is a gold or silver miner. Here's a look at crude oil. I'm seeing Tourmaline, which is a natural gas producer, is one of the most influentials as well. It's number 6. There's crude oil. It's having a strong day. It's up by more than 2.5% to 72.47. So when this day began, crude oil was at about 70, and we're now at close to 72.50. Here's a look at the U.S. dollar. Meanwhile, as the Bank of Canada gets set to make a rate, we could see a shift in the loonie tomorrow. I think what's priced in is the strong likelihood of a 50 basis point rate cut from the BOC tomorrow. There's the U.S. dollar, which has gained significant strength since the early portion of October. That's versus the Dixie Index, a basket of international currencies. And finally, here's gold. Here's the reason those gold and silver stocks are on a tear today. Gold is up to $2,760 US per ounce. That is record high territory. Why don't we take a look at a couple of the gold stocks? Here's Barrick. ABX is the ticker symbol in Toronto. We'll show you how it has fared. And after that, we'll show you IM Gold, IMG, which I believe continues to be the top performing stock on the S&P TSX Composite this year. There's Barrick. It's up 1.5% so far this year. Let's take a look at IM Gold. IMG is the ticker. This one is up over the past, just this year alone, 155%, and that equals a 5-year return of 72%. Thanks for watching Market Call. Andrew Bell is up next.